Ladies and gentlemen, welcome back. We have completed the first segment of the bank reconciliation statement, and it was our intention to clarify the concepts in relation to the tips that one should understand or learn in dealing with bank reconciliation statements. You'll recall in part in the previous lesson that we indicated that in treating with the bank reconciliation statement, we must remember that our bank treats our funds in the bank as a liability, right? And we treat our funds in our cash book as an asset. Very important point I want you to remember. Secondly, that the bank and our cash book, because of time differences, yes, there is always likely to be discrepancies or disagreements in the balances at the end of the month. We have discussed as well those reasons or some of those items earlier that would have caused our bank and our cash book, our bank statement and our cash book not to be in agreement. I'd like to re-emphasize then that in treating with bank reconciliation, we are seeking to make sure that our balance in our cash book is the same as the balance at the bank. All right? And there are times when we in our business have record information in our cash book, but it is not stated in the current bank statement because the information would have come in after the processing of the bank statement to us by the bank. And the other situation is where the bank may have done some entries, for example, bank charges. Yes, they would have done some entries and they have that in their bank statement, but that information we were not privy to it yet. So you'll find that the bank will have something that our cash book doesn't have, and vice versa. There is the third situation that may occur in bank reconciliation, and that is where there is a double entry error. So maybe the accountant may have either omitted something or did not record following the double entry principle properly, and so the cash book may have some figures that are different or some entry that are in error. Those are the likely situations in relation to bank reconciliation. Now, I want to also point out that in our last lesson that we sought to show you how we would deal with the reconciling of the cash book and the bank statement. Now, we talked about last time the diagonal principle, right? So if we are checking the debit side of the cash book, we are going to check the debit side of the cash book with the credit side of the bank statement. If we're checking the credit side of the cash book, we're going to check the debit column of the bank statement. So from debit to credit, from credit to debit. So we do the inverse, right? Diagonal. So we're looking at debit at one and credit of the other, or debit of one, credit of the other. All right. Now, this is an exercise. So our objective today is to complete this exercise correctly. So we want to give you enough practice to be able to manage the concepts. All right. So let's go now. The first thing that we're going to be doing then is that we're going to be opening our adjusted cash book, right? So we're going to do the adjusted cash book. Now the first thing to do the adjusted cash book, we must pick up the closing balance from the cash book. And this is the closing balance from the cash book. We're going to pick up this closing balance. Now the closing balance is on the credit side. Therefore, we're going to have it on the debit side. Opening balance on the debit side. So we'll have balance brought forward, and that is 1831. Okay, that's the first thing we do if we're going to do the adjusted cash book. We pull the closing balance from the cash book. All right. Now, secondly, we are now going to seek to identify those items that are down here that are not up here. So we're going to more or less look for the similar items. That's the first thing I think it is easiest to do, to identify all the items that are similar in the cash book and the bank statement. All right, so let's go. Let's see if we can identify. Let's take from debit to credit. We're not using balancing figure. All right, we have 88, so this one is here, and we also see it here. So that is common. All right, what about 73? Yes, 73 is here, and it is here. So we know that those are common. What about 249? Is it down here? No. What about Barrett? 178 is down there? No. So those are two items that we're going to need to use. Let's do and of course the 54 is not up here, so we're going to need to use this 54. Let's do the opposite now, and we're going from the credit to the debit. All right. Here we have 349. Yes, it is 349 is down here, so we know they are common. All right. We have 33 up here, and we have it here, so they are common. So we know those are not the problem. All right. But we also realize we have 22 here, but it is not up here, so we know we will need this one. And we have 115, and it's not down here. Okay. All right. So what we have done is to eliminate. We are doing nothing, the action of elimination, making sure we know what we don't need to consider. So we have identified all the items that would have been in both the cash book and the bank statement. The others that are not ticked would have been the ones that are creating the discrepancy or the disagreement with the balances with the bank statement and the cash book. All right, so we need the items to go into the adjusted cash book. So a second activity now to do is that there are the items that are down here that are not up here, and we're going to put it in there. And I think we can identify them pretty easy because we have done that. So this one, yes, this 54, it is not on the debit side of the cash book, right? This is, remember, diagonal. The 54 in the credit of the bank statement is not on the debit side of the cash book. And because it is not on the debit side of the cash book, we're going to put it on the debit side of the adjusted one. The item here is credit transfer. So we write credit transfer. Right? And that is 54. Okay. We recognize as well that this item 22 is not on the credit side because it's not in the cash credit side of the cash book. So we know that this item must go on the credit side of the bank statement, and we do that, which is bank charges. And the bank charges figure is 22. All right. Now that we have identified all of the items that would have been in the bank statement that is not in the cash book, we have placed it in the adjusted cash book, we can balance out this account. All right. So this side is smaller, so we're going to put in our balance. So balance CD. This now is going to be 5881. And we're taking 22 from that, so it should be 1, 8. Yes, 2 from that is 6, 2 from that is 3. Good. So, am I right? I hope I am. 1, 8, 8, 5. Yes, we close off that. Close off that as well. And this now becomes the balance BD. Take down that, right? So it's going to become the balance brought down of 186, yes, 3. So now we have accomplished the adjusted cash book. Our next action is to do the bank reconciliation statement. So let's begin. Bank reconciliation statement. As at, and it will be December 31st, since we've been working with December. All right, so we're going to have one money column here, one here, and we can have another one here. All right, so let's begin. So we're going to begin the bank reconciliation statement with this balance brought forward, and it is going to be balance as per cash book. Let me take that out. So it's going to be 1863. No, that's not right. Should have been out here. 1863. Good. So we use the current adjusted balance in the bank statement. Now, there are two items that we normally look for in the cash book to put in the bank recon statement. Two items we're looking for. We're looking for unpresented checks, or checks that are paid out to your suppliers or your creditors, but they have not yet presented it at the bank, right? So those we'll find on the credit side of the cash book all the time. So we're going to look for them now. So we will add the unpresented checks. All right. And of course we have done, so we realize that this is the item. Okay. So the unpresented check is on this side of the cash book, the credit side, and we see that this is the item that is there that is needed to be used. And it's what now? It is G small. And G small is 115. Now we said we're going to add the unpresented check, so we're adding these two figures. So it's going to be 8 and 7 and 9 and 1. 1,978. Then our next move is to less or subtract the bank lodgements, right? Now, the bank lodgements are always found on the debit side of the cash book, debit side. And we know these are the two because we have done the elimination earlier. So these are the two items we're going to need. One is K wood, and it would be 249. The other is M Barrett, and the figure is 178. So we're going to do an addition of this sub figure, and we're going to put it here. So 9 and 8, that is going to give us what now? 7, that is going to be 11, 12. Yes, 12, and that's 3, 4. All right, so it is going to be 427. We're now going to subtract this 427 from this figure. Okay, this is going to give us 1. Take 2 from 7 rather, we get 5. Take 4 from 9. We're going to also get 5. All right, bring down the 1, so it is 1,551, and that is what we call our balance as per bank statement, and we can double line it now. So we would have corrected the balances adjusted the balances in the bank statement and the cash book, right? So that's the exercise, the practice for bank reconciliation. We will stay tuned. We're going to be giving you another exercise to make sure that you develop the expertise in doing these questions or situations. All right. So that's it for us. We'll see us on the other lesson, as we are going to look at other practice questions so that you can develop your ability. Thank you.